I'm Lito, and I've been interested in crypto for the past 4 years. Spent pretty much all of my time on this topic. I'm completely obsessed by it. And I started with a crypto education platform called cryptotesters.com, I think around like 3 years ago. And I also work with 3 projects in the DeFi space. You'll understand more about what that exactly entails after this call, hopefully. But yeah, I'm a core member of 3 projects. One of them will also look into this call because I think it's a great project for beginners. And yeah, so that's about me. So what got me interested in DeFi is really actually it's really the possibility to create a new financial platform that is completely decentralized, that is completely global, borderless, and uncensorable, immutable. So it's a bit like the internet, which is a protocol for transferring data. The internet is not owned by any single government, which I think is also one of the reasons it was adopted worldwide, because if it was owned by, like, let's say the United States, probably, India wouldn't adopt it because there would be like national conflicts. But it's like the internet is just a standard, right? And Ethereum is really the same. It's a set of standards to basically transfer assets. And so it's doing a similar thing that the internet did for information, namely democratizing it, and like the ability to transfer data even into countries that are quite isolated. And it's doing the same thing, but for financial assets. And the financial system hasn't seen like any innovation in the really like in the last couple of decades. Like we're seeing some trends in fintech, but it really is just not really innovative. It's just a lot of the fintechs today are just like nice front-end interfaces on very old systems. And like if you want to, like Jack Dorsey from Square put it quite accurately the other day when he said, when you want to create an internet business today, it's so easy, right? You can create a web application and anyone in the world can use it. But if you want to create a financial application, it's super hard. You have to go market by market because the whole thing is just riddled by regulation. And if like building a financial application on Ethereum, you can just, it becomes global by definition, because everyone can interact with the smart contracts that underpin that application. There's no, you don't have to, because these applications function in a completely decentralized way, you don't have to, and they're not operated by a single company, you don't have to like talk to regulators in order to make it available, in the UK. Imagine you're like a US startup and you want to go to the UK. So there's that, but it's also a lot about like financial access. So in Argentina, for example, or like Lebanon or Iran, all these countries, they have a lot of inflation, for example. Their countries are quite incapable, and all these people would like to hold in a currency that is stable, but their government doesn't let them because they want to they don't want people to dump their local currency and flee into safer currencies such as the dollars. So they put like capital control, they enforce capital controls. Or sometimes it's the other way around. Sometimes it's the Western countries putting embargoes on those. And so like what DeFi enables is also that these people, regardless of what their government wants them to do, they can get access to a dollar in like stablecoin dollars, and put them into decentralized financial applications and earn, for example, yield on it. So it's like every function that traditionally is done by a bank is then done by decentralized applications. So that's just in a couple of words what DeFi is about. It's much more, obviously. It's like the ability to, everyone in the, like, it pools all the human capital. Everyone can build a financial application on top of this platform. They don't have to ask anyone, you have financial applications on Ethereum that are built by 16-year-old Indian developers that have learned Solidity on the internet. And like, this is just not possible in traditional finance, where they would never get investors, they would never get users, they would never be able to go through all the regulation hurdles. So there's just, on so many fronts, it's a complete game changer. But I don't want to talk too much about, the theory behind it. I think you can look into that. You'll also see maybe your own, or take away your own points of why you think it's interesting. I want to make this more tangible and show you a bit. Wait, I'm going to share my screen and show you a bit what this DeFi thing is about, because I feel like many people have only used crypto through centralized exchanges, and they think that's it, basically. That is crypto, but that's like 1%. That's like, you haven't seen anything basically when you buy Ether, for example, on Coinbase. You're just holding it in a centralized crypto bank, and you're just holding the asset. You're speculating on the asset, but you're not using the Ethereum network yourself. So the first step to use a decentralized application is to download a wallet. And the most popular one is Metamask. Metamask is a little plugin, which for me appears here. It's a browser plugin, and I'm not going to go through all the steps, but just show you where you would start if you would do it. So you download it, then you copy your seed phrase, which is your private key, and your private key guarantees access to your account. Basically, you write it somewhere safe, and then it guarantees that, for example, if you lose this computer where the wallet is stored, you could then regain access to your funds, because no one else has access to your funds. Metamask is they don't have access to your seed phrase either. It's not like Coinbase. They can't do anything. It's just an interface to interact with the blockchain. So there's really just, it's really just an account, and that private key kind of guarantees your access to that account. And in your daily interactions with the Ethereum protocol, you don't need your seed phrase, right? It's not like a password that you need to type in every day on a daily basis. It's really just, it's like a backup, if you want, that you only need in a case where you'd lose your computer or something, because the private key is stored locally on the computer. So as long as you have it, you're fine. On a daily basis, you just use your wallet. You can, for example, send to another account. But what we're going to do is we're going to show like how to use actual applications. So the first one that I want to show is Uniswap. And at this point, I'm sure you have heard, like if you're in this workshop, you probably heard about Uniswap. But Uniswap is, one of the most used applications. We call these actually dApps, right? So in the traditional world, we have apps, and these are dApps, so decentralized applications. And it's one of the most popular, has like millions of users by now. And the volumes, the daily volumes that go through Uniswap are higher on some days than on Coinbase. So, like 2 or 3 years ago, they said it was impossible that decentralized exchanges would become big one day, would scale. And today they are bigger than their centralized counterparts. So there's, all the skeptics are kind of convinced nowadays. But what Uniswap allows you to, what Uniswap allows you to do is to swap, to convert one token against another token, and not just another token, but any other token on the Ethereum blockchain. So on Coinbase, you have maybe access to 20 tokens. On Uniswap, you have access to like 30,000 tokens. So anyone can create a market for like their token. If I would create like Lito coin tomorrow, I could create a market for that, and it's extremely easy. You know, if you want to get listed on a centralized exchange, you need to make deals and stuff. You need to employ a professional market maker that puts liquidity on the order book. Here, it's super easy. I can even show you. I would create a pair, and I would say, okay, here I put like 5 ETH, and I put like 5,000 Lito coins. I would deploy the pool, and then there would be some initial liquidity in that pool, and then someone could come and could buy, like, you know, with 1 ETH worth of Lito tokens. I'm going to show you. I'm going to buy, for example, dollars now. I'm going to sell like 1 ETH, and so you see here, yeah, it's just a swap button, and then my MetaMask wallet pops up, and you see here there's a gas fee, right? This gas fee right now, so yeah, it's $35. The gas fee, what it is basically the transaction fee, and it's basically what you pay to miners to get your transaction processed. Because you have to imagine the blockchain is like this engine where every 15 seconds a new block is formed and appended to the chain of blocks that are already like processed. And in order to get like, and basically, like, since there's only a certain number of transactions that go in one block, sometimes you're competing with other users who also want to get their transaction processed. And that's why you have to put like a transaction fee. And MetaMask calculates the right transaction fee that you need to put in order to get the transaction processed. But yeah, just that's why this varies. So like, for example, if I would repeat the same process like in 5 minutes, it could be that the transaction fee would be, okay, it's still the same, but it could be that it could be like $40 or maybe less. You know, it's like supply and demand, basically. If a lot of users want to use it at the same time, I would need to pay more to get my transaction processed. So yeah, this is Uniswap, and it's quite cool if you think about it, because it's a global exchange that anyone can use. You don't have to KYC, you don't have to sign up, you don't need your email, you just need an Ethereum wallet, and you can use that exchange. And there's no like company operating Uniswap. It's just smart contracts that execute the transactions and that orchestrate the whole settlement. And that's why we don't really talk about like companies in the context of DeFi. Like, there's no company Uniswap. We talk about protocols, and Uniswap is a decentralized protocol. It's governed by uni holders, so it has a governance token called uni, and uni holders decide what what the future direction of the protocol should be, and like what the fee, for example, should be that goes to. So this fee doesn't go to like a company again. There's like a fee that I pay here, Liquidity Provider Fee, which is 0.3% of the whole transaction amount. And it doesn't go to like a company, it goes to liquidity providers. So these are people who, I'd said before, I could create like a pair. When you put liquidity in a pool like ETH and USDC, for example, in this case, you're automatically earning all the swap fees that are generated by traders. So if I would buy now, the liquidity provider fee would go to people who have provided these assets. So like, yeah, it's a decentralized protocol. The uni holders decide on the future of the protocol, and the smart contracts that power this application, they're completely immutable. So no one can change them. No one has like admin rights over them and can just like change what they do or like steal user funds. They are like immutable. And when this, so if this project, for example, would want to launch a new version of Uniswap, like a better one, then it would, those contracts would still exist. They would need to write new contracts, but they cannot make changes to the existing ones. And that's actually what's happening today. It's a big day. Uniswap v3 is launching. So that means that there will be completely new contracts, but those ones will continue forever. And yeah, you can see, let's see like some info about Uniswap. So you see there's like $8 billion worth of liquidity. It's not like a toy application. It's used by a lot of people. These are all the pairs that exist, like all the pools, and so. Okay. Am I done with Uniswap? Yeah, one last thing about Uniswap. So about like dApps in general, like these things are the front end is not very important for decentralized application, because anyone can just deploy a new front end. And what really is important is the back end, the smart contracts. So the back end is not like a data. When I'm doing the swap here, there's no interaction with a centralized database. It's directly done by a smart contract. And so that means that basically anyone can create another front end, even if, you know, this front end is centralized. Like there's a specific group of people who have provided this particular front end, uniswap.org, but I can create, you know, like litoswap.org tomorrow, and I will use the same Uniswap contracts. And in fact, another application that I will show today, you'll see that Uniswap is also integrated in it. Because the smart contracts, they are public, they are open source. Anyone can like use them, integrate them in whatever way they want, which is another key advantage over traditional finance, where, you know, partnerships, you need to sign contracts. It's like 1 year back and forth. Here, any application can integrate another application's code and do so without having to talk, because yeah, all the functions are public. So yeah, with that being said, I'm going to show you another application, which is Aave. And Aave is basically a lending platform. So it allows anyone in the world to either deposit assets or borrow assets. And so we can look at the markets. So right now, so you see there's like different markets, like for every asset that they have listed, there's a different sort of interest rates, and it tells you like what the deposit interest rate is, what the borrower interest rate is. And if I want to, like, for example, if I deposit some assets into this market, I immediately start to earn interest on it. So what I have done here, for example, in my case, is that I have put some collateral into that application. So I've lent out 30 ETH to that application, and in return, I have borrowed $30,000 from that application. And the reason it works like this, we call this over-collateralized loans. So in a traditional world, most loans are under-collateralized, right? Like you go to a bank and they check your identity, they check your credit history, they check your income. And this, by getting all that information from you, they are able to put a risk score and on you, and then they give you a loan. Here it doesn't work like this, because there's no concept of identity. Smart contracts don't know what your income is if you're a trustworthy person. So the only reason this application is able to give me a loan is if I'm able to secure my loan by putting some other asset or some token that has value into it, so that whatever I'm depositing is always bigger than what I'm borrowing. But in effect, in my case, for example, I mean, the reason why I would take a loan in this application is that maybe all my wealth, all my net worth is denominated in crypto, but I don't want to sell it, and I want to I have some expenses to do in real life, right? Maybe I need to pay rent, maybe I want to buy a loan, and here I can basically deposit my Ether and get some stablecoin loan paid out. I could go then to an exchange like Kraken or Coinbase, convert those into euros, and then spend them in real life. And by doing so, I would continue to be exposed to the upside of ETH, because I still have them, and whenever I want, I don't have like a loan duration or termination. Whenever I want, I can repay either the entire loan, then I can take my assets back out, or just part of it, whatever I want. I can also, since there's much more collateral than I've borrowed, I could also now in seconds borrow like $10,000 more. You see, the max that I could borrow now is 54,000. But I don't want to borrow that much, but I could borrow like 10,000. Oh no, damn. So if I go here, then I can choose, I'll explain this in a second, but yeah, I choose the variable rate. And see here, bam, no questions asked. It's just my wallet that opens. I confirm the transaction. And yeah, when I do that, the smart contracts would do their things, and the $10,000 would be in my wallet. Now, why is the interest rate variable? Like, why is it not fixed? It's because basically the interest rate is determined algorithmically. It's not like one person saying, okay, today the interest rate should be like this and tomorrow it should be like that. It's determined by code. And this code, basically, it measures how much demand and how much supply there is for any particular asset. So for example, for USDC, it looks like how much people want to deposit DAI and earn interest on it. USDC, how much people want to deposit USDC and earn interest on it, and how much people want to borrow it. And if, for example, a lot of people want to borrow it, but there's not a lot of people willing to supply the asset, then the interest rate automatically goes up in order to incentivize more people to deposit it. For example, it would go up by, imagine the deposit interest rate would be like 20%, then more people would be interested to deposit, because it's like, okay, 20% on my dollars, that's interesting, I'll do it. And then, so this interest rate regulates itself in order to satisfy demand and supply, basically. And yeah, what else? One thing that's important to mention is, so the impact of this is quite cool. So some people like myself, I use this for leverage, right? I deposit my ETH, I borrow USDC against it, and then with the USDC I buy more ETH in order to kind of, it's a bet on the market. But for many people, don't even need to do that. For many people, this can just be a global saving account, right? Because anyone in the world can hold USDC in their non-custodial wallet that no one can, control except them, and then they can, again, using my example from people in Iran or something, they can hold dollars in a non-custodial wallet, and then they can even deposit it in an application that gives them an interest rate on it. So they don't need a bank anymore. And if you look at the interest rates of traditional banks, it's like, it's between like 0 and 0.5%. If you're lucky, if you're unlucky, you pay negative interest rates. So for depositors, this is incredibly interesting. And then for traders, the borrowing can also be interesting. And then a last thing, you see this health factor. So this kind of determines how, if you're borrowing, or maybe I should phrase it the other way around. So these deposits, if you just want to like earn 10%, 15% interest rate on your dollars, it's very interesting, and I say it's incredibly secure. In like 3 years, there's not been a single loan that has defaulted on Aave. And the reason they are so secure is that they're all over collateralized, right? Like every borrower, like myself, who has borrowed like some USDC or some other asset, has secured their loan with some security. It's a bit like when someone gets a mortgage loan, they put their house as a security, the bank knows they will pay back. And here it's the same thing. The Aave protocol knows that I will pay back because they have my assets. And what happens, for example, if you know the Ether price would crash, which it hasn't in a long time, but if it crashes like, you know, by a crazy amount, what would happen is that the smart contracts would just you know, as the health factor would go down and down, you know, imagine the Ether would approach like 50,000, my health factor would be like, you know, 1.5, and then it goes like 40,000, okay, and then it's like it's red and it starts going down, and at some point, it's basically when it reaches a certain threshold, the smart contracts would automatically seize my Ether and sell it on the market again, for example, on Uniswap. So that's the beauty of like, they can integrate Uniswap. Aave can do that without asking for any permission. The smart contracts would just take my ETH and sell it for USDC just in time, so that depositors have their capital plus interest rate back. Okay, so that's basically another super interesting application. And then what else? Yeah, here we can see, for example, the effects of governance. So like Uniswap, this is a protocol, it's governed by Aave holders. So Aave is the native governance token of that protocol. It's similar to, you know, Facebook, which is governed by the Facebook share, just that this is like real control. Like Aave holders have real control, that like nothing can be executed. Technically speaking, nothing can be executed if the Aave holders don't agree to it. And so, for example, just a very simple explanation of, or simple example of like the kind of decisions that are being taken is, for example, like which new asset should be listed on Aave. So you see, for example, this has passed. So you see now X Sushi is listed as an asset because the people have said that it's safe enough. So this is not like a Uniswap where anyone can just create a new market. Here it's actually the governance puts the thumb on it, because they only want like safe assets to be listed. Otherwise it could, yeah, if there's like one weakness in the system, it could like have spillover effects on the liquidity of the whole protocol. So yeah, and then lastly, yeah, Aave token holders can also stake their Aave, and this acts like as insurance on. It's like the lender of last resort, similar to if the bank, if someone defaults on a loan that they have taken at the bank, the bank needs to, they need to take it out of the balance sheet, basically. In the case of this protocol, there's no balance sheet. So the Aave holders who decide to stake their Aave tokens, they act as a lender of last resort. So imagine this has never happened, but imagine, ETH has crashed and the protocol has not sold my ETH fast enough in order to pay back depositors. Well, then the lender of last resort, the insurance module, would jump in. And for taking that risk, Aave stakers receive like 7% per year. Exactly. So, and this comes from the treasury, basically. And the Aave protocol also makes revenue because they charge the protocol charges a very small spread on every loan that it facilitates. Okay. I think this is a good time to take some questions if you have some. Otherwise, I'll jump to the next kind of application. Just raise a hand if you have a question. Okay. Nothing. Okay. Yeah. Yeah. Is there a question?
Hi. There were a couple of questions in the chat while you were presenting, but some people have answered the questions to each other. So just so you know.
Perfect. Perfect. Yeah, I don't even know how to open the questions again, like the chat again. Participants. Anyway, I'll figure out later. Yeah, so what other kind of applications exist? For example, there's Synthetix, and I'm going to simplify a lot here. I don't want to go often the way how these applications achieve what you can do is quite complex under the hood, but it's not really important to understand it on first sight. Right now, it's just you just want your curiosity being triggered, right? And it's just cool to know that you can do it. So Synthetix, for example, as a name, this is just another interface for Synthetix. The protocol that it uses is Synthetix. So this is the protocol. This is just one interface, just one trading interface for it. But what this protocol does, it creates synthetic assets of any real world asset that you want, which means you can trade USD on the blockchain. There's also other stable coins such as DAI or USDC, but so you can any fiat currency can be synthetically reproduced on the blockchain. You have gold here, you have oil, you have silver with somewhere else. You have, these are indices, the Japanese Nikkei, you have Tesla, you have, there was also Netflix. I don't know where they are all, but and there's more and more assets being added every day. So that's super cool, because if you know, half the world can't access the US stocks, for example, which are, the most interesting stocks to trade. What you have decentralized insurance protocols, so you can insure yourselves against the risks of, using any of these things. You have, for example, Yearn, which is quite cool. On Yearn, you can automate your investment. For example, depositing USDC here will give you a better interest rate than on Aave, because this is an aggregator. It automatically finds the best interest rate on all of these protocols combined, and it automatically puts your USDC where it's highest, and that's how it generates the best interest rate. And in addition to that, it does some other things which increase your returns even more. If you want, I can quickly explain what. For example, it could. So in some cases, for example, if you use this lending platform, which is a competitor of Aave, another lending platform, they want to incentivize people to borrow and lend because they want to create network effects. The more people lend and borrow, the more liquidity, the more useful the application becomes. And so they airdrop, they distribute some of their native governance token. In this case, it's called COMP, the token. They distribute it to the users. it's a bit like if Facebook had said on day one, like, hey, you know, like for Facebook, it's super important that we reach a critical user mass, because that's only when Facebook is useful. If there's only 2 people, like it's not useful. So we're like gonna give Facebook, or like Uber, you know, Uber is only useful if we have a lot of riders and a lot of users at the same time, so that, you know, riders are busy and earn money. And so it's kind of similar to if they would do that, just that they don't, traditional companies, because it's incredibly complex to do these employee share programs, and it's also not in their mentality, and like doing that cross-border, it's almost impossible. But with a blockchain and tokens, you can do these things super easily. And so if you lend here, as I said, you receive COM tokens. Now, what Jörn, for example, does to increase your returns, when it deposits your USDC into COM, it automatically harvests or claims the COM tokens every day for all the users pooled together, and then like sells them and into USDC, redeposits the USDC in order to have more USDC, earn more interest, and so on, creating like this loop. And and this is just one super simple strategy, but basically every vault, these are all vaults, and every vault that you see has a different strategy underlying it. And these strategies are coded, they can be coded by anyone. And the people who code them, they receive a strategist fee. So they receive a tiny fee of what that vault generates, which is kind of crazy. And yeah, so then I also want to show you Indexed. So Indexed is the project where I'm very heavily involved. And by the way, have you seen that I've never logged in anywhere, right? Like I'm always just logging in with my wallet. So for example, yeah, here I'm always logged in already because I have used the site before, and it's still, my address is still in my cookies. But let's go to a website where I haven't been for a while. Yeah, here, for example, Connect Wallet. This is how I connect. This is how I sign in. When I do this application reads from the blockchain, and it knows my address, and it shows my balance, and it has all the information it needs on me. Now, if I want to do anything, then I need to sign the transactions with my wallet, as you have seen before, where I need to click on the button, and then this creates like a cryptographic signature, which is relayed to miners and so on. But yeah, no sign in, nothing, which is nice. So Indexed is a protocol that I always recommend to, you know, as a kind of first step for people who want to start crypto investing. And what Indexed does, it creates decentralized indices consisting of tokens. So for example, DeFi 5 is an index of the 5 best tokens in the DeFi space, best measured by like market cap. So like we call them the blue chips. Then CC10 is a bit broader if you want, yeah, to diversify a bit more. And then you have, for example, Degen. It's an index of like smaller cap tokens. So not like high market caps, but like smaller like gems basically that have more growth potential, but also more risk. And you have NFT index. Like not going to go into these because they're a bit complicated, but so this basically, by holding one of these, you automate your whole investment strategy. You say, look, it's yeah. Someone wants to say something? No. You say I don't have the time to manage my portfolio. I don't know which token is going to perform best. And okay, my sound is somehow a bit weird. And I just want to buy this index, which is going to track the market, a bit like buying the S&P. Okay, this is fucking weird. A bit like buying the S&P 500 index. And for example, this DeFi 5 index has, from January 1st, has increased by like 500%. So, and right now it controls $20 million in assets under management. CC10, yeah, around $8 million. And one other interesting thing is that this is not controlled by any fund manager. If you would buy like the S&P 500, you pay a management fee to the people who build this index, basically the S&P 500 index, who re-rate it in order for the index to track the S&P 500 performance accurately. This year, it's completely all the re-rating, rebalancing of the index, so the selling of the underlying tokens and the buying whenever a new token gets added to the index and a new one and an old one gets removed because it doesn't fit the criteria anymore. All this happens automatically, meaning that you can completely sit back. It's all done by smart contracts. So I personally think that this is amazing because indices have, even in traditional finance, they have outperformed. There's been like really long studies about how they've outperformed active investing over long-term horizons, especially in bull markets like in crypto. It's just easier to buy one of those because if you bet, it's more diversified. Basically, if you buy one token, you risk missing all the upside if that particular project does badly. And by buying like an index, you kind of catch them all. It's like saying, it's a bit like if at the beginning of the internet era, you wouldn't have said, look, I'm going to buy Amazon, which probably you wouldn't have because like not many people knew about Amazon at the beginning. But you would have bought like an internet tech index, which would have performed equally well. And so buying like a DeFi index or a CC10 index is kind of saying the same thing. Like I believe in the crypto sector and the good assets, but I don't know exactly which one. And I don't have the time to do everything. So yeah, how you would do this? Let's click here, for example. So here you see the underlying assets and you just say like here, so you just put like the amount and then you click on swap. I don't know if I'm logged in. And this, by the way, is using Uniswap as well. So you see, Uniswap is integrated here. It looks like it's this trading functionality is provided by Index, but it really uses just Uniswap. So there's a pool where ETH and DeFi 5 are inside, and it does when you swap here, it uses that. Guys, can you give me some feedback if the internet connection works, because I have a lot of sound issues on my side.
Yes, no?
Yeah, no problem.
It's working.
It's pretty good.
Okay, okay, perfect. So yeah, the when you trade here, it's really just Uniswap, but the index tokens themselves, so DeFi 5, that's created by the index protocol. So those tokens that hold, so the portfolio, the assets that are under management, basically, they are held by the index protocol, and yeah. So what else can I show you? Maybe a couple of apps or like tools that help me with my life in DeFi. So one that I really like is Zerion. This basically allows you to connect a specific wallet. So here, like this is one wallet that I use, and I can just like connect to it, and then Zerion shows me all the information of that wallet. Because the thing is, my Metamask, it shows me what assets I hold in the wallet on the account. But imagine, for example, I put it into Aave, right? If I put my USDC into Aave, well, those USDC are not in my wallet anymore. And so my MetaMask very quickly becomes not the best way of tracking my portfolio anymore, because a lot of my funds are actually deployed in other applications. And so what Zerion does, it's basically a portfolio tracker. Many of you have probably used Delta or Blockfolio, which do the same thing, but more for exchanges. So for centralized exchanges, you can connect your Coinbase account and your Kraken account. Zerion does this for DeFi. So you can connect, you just put your address, 0x, blah, blah, blah. And then it shows you kind of like what you have in that wallet, like the assets, but it also, and here it's not so much what you can see, because I didn't want to like go into one of my main wallets for privacy reasons. But basically you can see that it shows even assets that I have on other chains. For example, this is on Polygon, Matic. This is on Binance Smart Chain, which I never really use. And this, for example, here I'm a liquidity provider on SushiSwap, which is a competitor of Uniswap. And it shows, so imagine this thing, basically, it does a lot of, it tracks all your portfolio, but you can also do other things. You can, for example, exchange. So this uses Uniswap as well under the hood, but also a couple of other exchanges. And so it aggregates, it finds the best quote for you. It's a bit like Kayak, but so what Kayak does for flights, this Zerion does it for trading. So if I want to buy like USDC, it will split my trade. Imagine I want to buy like, I want to sell like 1,000 ETH, which is quite a big amount. Then maybe the price on Uniswap would not be the best, so it would then split my order across like a couple of exchanges and also execute it in order to get the best rate. Then what else? For example, here you see it has like a place for DeFi indices. So there's also, you can see our DeFi 5 index, then Degen index. And yeah, what else? Do you have questions?
Yeah, Lido, can you just explain what, for instance, the DeFi top 5 in the indexed, what are the coins that they actually have as the index points?
Yeah. So yeah, sorry, I didn't mention this. Uniswap, Aave, Compound, Synthetix, and Curve. So these are 2 lending protocols. This is Synthetix, like, which creates synthetic assets, and these 2 are exchanges. So these are like, yeah, it's really symbolic for what works in DeFi. These are like the kind of flagship application. And what is currently happening, you see a 6th asset. This is MakerDAO. This is the protocol that is responsible for the stablecoin called DAI. DAI is a decentralized stablecoin. So it's not like USDC or not like Gemini USD or USDT, which are all like centralized stablecoins. They're just issued by companies. These companies put like dollars in a real bank account, and then they put like a token on the blockchain, and they say, look, this token, it has a value of $1 because we guarantee that we hold the equivalent amount of dollars in a bank account. And whenever like someone comes to them and says, hey, I want to redeem my USDT token against like $1 in a bank account, then they provide this function. So that's a centralized stablecoin. MakerDAO is a protocol for creating like a decentralized stablecoin that is not collateralized by USD in a bank account, but by ETH. And the ETH is held in smart contracts. And there's a lot more logic to it, but that's basically what it does. And it's hugely successful. Look, this is DeFi Llama. This is a cool analytics website where you can check like how much value is locked in each application. So you see today there's like $134 billion held in DeFi applications, and MakerDAO has like $10 billion worth of ETH, and there's like $3 billion. They have issued $3 billion worth of DAI. So there's $3 billion worth of dollars, of synthetic dollars in circulation, which people use for, and it's held its value phenomenally. So one DAI is always worth $1. And people use it for commerce, for like remittances, for all sorts of things. And so USDT is the biggest stablecoin, then there's USDC, and DAI is the third biggest. And what's happening right now is that MakerDAO is being phased in because Synthetix has not performed so well in the last months. The index protocol is basically slowly phasing in MakerDAO and phasing out Synthetix. This process takes a couple of days, but eventually people will hold Maker. And that's what I mean when I say it automates this process for you. You don't need to bother about, identifying winners and losers. You could like forget about the DeFi market for a while, and you know that you will always hold the 5 best projects.
Could you briefly comment on the difference between the different stablecoins?
Yeah. So, I mean, more than just saying that USDC. So USDC is issued by a consortium of companies called Circle, and it consists of like Kraken, Coinbase, and a couple of others, Poloniex, and then Tether is issued by a company called Tether, but it's owned by Bitfinex, which is a big exchange. And then DAI is from MakerDAO, and then there's SUSD, which is one of the many synthetic assets from Synthetix, but it's not nearly as big. What do you want to know?
Well, I mean, how trustworthy they are. I mean, are they all one-to-one backed up by actual fiat?
Well, only the centralized ones, right? So, and there is also some debate, are they really backed up one-to-one? Because you don't know, right? Like with MakerDAO, you know that it's collateralized, over-collateralized by ETH. So you know that one DAI can always be redeemed at face value. But in the case of like Circle, you don't really know, because the information about how much dollars they hold in bank accounts is not on chain. It's not verifiable for everyone, right? They, periodically will issue an audit by some Ernst & Young company, but you know how these operate, right? In the case of Wirecard, they didn't do such a good job. So they are operating very professionally, both Tether and USDC, in my opinion. But in the end, it's centralized. So like in the crypto space, we say like, don't trust, verify. You can't verify. So yeah.
Thanks.
I have a question about the gas costs in DeFi.
Yeah.
How can I try the different DeFi protocols with like $100? Is there a way without like gas eating all my capital?
It's a very good question. So you're asking if you can invest with like $100 and like still kind of make some nice profits or play around in a meaningful way.
It is less about making profit. It's just about actually using those contracts. Like if I would try to put some money into indexed, like $100, what would be the gas costs? And how do they differ on different contracts? Because like to me, it's really, I don't understand how this gets defined.
Yeah, that's so basically the gas cost is, so gas is basically the unit to price computation. in the Ethereum network, because what Ethereum really is, it's a decentralized computer, right? And you, as a user, you execute code basically, and the miners, they run this code. Whenever you trigger a function, they run this code and they check the output. And so what you're paying for really is computation, and that's why some operations are more costly than others. So for example, a swap on Uniswap, like we saw before, it would cost like a certain number of, we call it gwei. So that's what gas is measured in, like imagine it's like liter or something. And it would be the swap operation on Uniswap would be like, let's say 20,000 gwei, but like to deposit ETH into Aave is 100,000 gwei, completely theoretical. And this computation, it doesn't matter how much you deposit, you know, if you deposit $1, it's the same computation and it's the same gas fee you would pay than if you deposit $100,000 or 1 million. So that's why really it scales really well to when you transfer or play with big amounts. And for small amounts, it can take a big chunk of what you're trying to do. So right now, for example, a swap on Uniswap, as you see, costs $35. A deposit transaction on Aave would cost like $30. And then there's more costly transactions. It really depends. Now, what you can do if you just want to play around is to go on testnet versions. So there's like fake versions of Ethereum where like developers go to test their applications with fake money. And if you just want to try out things, you know, just to see kind of how to do things, you can get like fake money, fake ETH into your wallet and start using Index with fake money. That's one thing. What you can also do is go to Polygon. So Polygon or Matic, it's a sidechain of Ethereum. It uses exactly the same technology as Ethereum, the same engine as Ethereum, which means that all the smart contracts that work on Ethereum also work on Matic. The only difference is that it's a bit less, it's a bit more centralized, and that's why the transactions are much cheaper. And that means that you can, and today many applications like Aave or Indexed or have also instances on Matic, so you can do a lot of these things for like, you know, 1 cent transaction fees, which is kind of cool. And Binance Smart Chain, for example, is another sidechain of Ethereum. They are connected to Ethereum by a bridge, meaning, for example, if I have a tutorial which I posted about this exactly yesterday, about how to use Polygon, but you can basically transfer assets from Ethereum to Matic by using this bridge. This bridge is basically a smart contract that locks my ETH that I send on the Ethereum network. It locks them, and then it issues like Matic ETH on the other side. And whenever I want to go in the other way around, the smart contract releases my ETH again on the Ethereum network. So there's like all this build, and all these side chains are connected to Ethereum, and you can do all the things, like a lot of the things that we've seen. But I mean, the vast majority of activity is still happening on Ethereum. And you know, Ethereum is it's the most centralized. It's the most decentralized. It's the most secure. It's where all the activity happens. But the long-term goal with this is that we have some scalability solutions that are in the pipeline, because obviously, you know, we want to democratize finance. We want to make it available to anyone in the world. But like someone with $100 in India or so, at the moment, this didn't used to be the case, but due to the success of the network, these people are priced out nowadays. So what has been in the work for 2 or 3 years now, but is very close to completion, is Ethereum 2.0, which is a transition of Ethereum to proof of stake. And this will make the whole blockchain much faster, much cheaper, without compromising on security and decentralization. This is one thing. So it's basically improving the network itself, the base layer. And then there's another effort that is taking place, which are so-called layer 2 solutions. This is the short-term solution. The Ethereum 2.0 is the medium-term solution. It has started already, but it's going to take like 1 year at least until until it's completed. Right now, it's like, you can imagine it as like this building, the foundation, the fundament of this new building has been laid, but we're not ready to move in yet. In 1 year, the current Ethereum network will be moved to the new network and everything will, be merged. But right now, so the short-term scalability solution to bring these applications to a lot of users is by deploying so-called layer 2 solutions. And those are networks that are also connected to Ethereum, similar to these side chains that you've seen, like Polygon and BSC, but they are actually much more secure. And how they work is basically the computation happens on this like adjacent network, and it just submits cryptographic proofs to the base layer Ethereum, which means your funds are basically secured by the Ethereum network. You can always be sure that whatever happens in this layer 2 network will ultimately you have a proof that it happened, and you can prove it because there's a cryptographic proof submitted, but it's much cheaper to do so. So the scalability, the scalability gains are enormous. And the first one is going to go live in like 1 month or something, which is Optimism, and another one called Arbitrum. And these, just to finish, I saw there were a couple of questions. This is what makes me so bullish about Ethereum. It's like these are the smartest teams in the world working on this. Literally, like Starkware is another team. There's like Nobel Prize winners in quantum physics. Like it's literally insane the amount of talent that is in the space working on this. And the reason they work on Ethereum as opposed to some other centralized chain like Cardano or something, which doesn't even have a single application live, is that this is really open source, decentralized, and what developers ultimately want to advance, right? Yeah. I saw some questions, but like, I don't know, I can't again see.
Emmanuel, I had just like a question. So I'm a total newbie. I see on Twitter that a lot of people are talking about farming and staking, and it seems like it's an important part of crypto. What do you think? Where can I get started with that?
So farming, basically what I showed you before with Jörn, this is the easiest example of yield farming, because your yield farming is basically what I said with comp. For example, this is called yield farming, right? They are issuing some token for using the app, and this token comp, for example, let's go. Yeah, this CoinGecko, by the way, is also cool. So comp, for example, is worth $775 right now. Like, and by lending out assets, for example, on Compound, you receive some comp tokens, and this is why. Wait. This is why you see, for example, there's an interest rate for USDC, which is 5.5, but in addition to that, you receive 2.92% in Compound tokens. So this basically is a very basic example of yield farming, because you're enhancing your yield. And now there's much crazier things, there's people that do very crazy strategies, also quite risky, but this basically is yield farming. On Aave, if you use Aave on the Matic network, which is actually, I'm going to show you how to do that with very cheap transaction fees. So here I'm going to change to Matic. And you see that you see that Matic, the network, they were super happy that Aave deployed the app on Polygon after Ethereum, because Aave is like one of the most successful DeFi applications. And so to incentivize users to, bridge some of their assets and the net worth over in order to kickstart or bootstrap Aave and Polygon, they are giving out Matic tokens to the people who do it. So you see, I received 3% in, just normal interest rate that is paid from the people who borrow, but I also received 4.6% in Matic tokens. And you see that these are here in my dashboard, and I'm going to claim them now. And you see here, like I'm paying like close to nothing. And I'm claiming them now. And now I'm going to go back to my dashboard and I'm going to deposit them. And like what you've seen now by me, for example, I've like deposited this amount of money, right? And I'm earning interest rate on it, like 7% in total. But then I borrowed against that. So I'm also, while I'm paying like 3% interest rate on what 3.8 interest rate on what I borrow, I receive 5% of Matic tokens on what I borrow, meaning that I receive 2% for borrowing assets plus what I earn, right? Which is kind of magical. And I can, like there's ways to do this much more efficiently, to like yield farm more, like in a more efficient way, basically.
Thank you.
So this is basically what yield farming refers to. Now staking, like people use the term staking in a very like, for everything basically, but what staking really means is, I told you about the Ethereum transition to proof of stake. And like staking basically means that you're staking your ETH to secure the network, similar to how miners, run mining rigs and secure the network by like burning energy. In proof of stake, people are staking ETH and they are guaranteeing that they are voting rightfully on transactions. And for doing so, they receive the inflation of the network. What used to go to miners in proof of work goes to stakers. And so if you stake your ETH, you earn basically like between 7 and 10% interest rate on your ETH. And yeah, that's basically staking. And so you can, just one second. You can basically stake yourself. So I have like this device at home where my validator node runs, and that's like the technically a bit more demanding way. But then you can also use staking pools, which are decentralized pools where many people come together and they put their ETH together, and then there are like services that run the validator nodes for you. So it's like super easy. You just need to deposit, and they run the technical part. They do the technical part for you and just take a small cut of the commission.
Hey, Lito, Sasha here.
Hey.
Thanks a lot for the presentation. I think it was really insightful. I just have a quick question for someone just like starting in the DeFi industry. Like, what advice would you give to someone who just learning about it, and where to start, because there are so many applications? Like what's the best way to start with it? Like, so Metamask wallet, and then what's the first step really?
So several things. I think important thing is stay away from shitcoins, right? Like there's like all the people at the moment that are like getting the information on YouTube, they're like investing in Cardano or like Dogecoin, which, okay, like Dogecoin, you could argue it's funny, it's a meme coin, but like Ripple, like these are absolute ghost chains. No one's using them. Everything meaningful is happening on Ethereum. So, or like Bitcoin is also a super interesting asset to hold. But I would definitely stay, like, that's really the most important thing, is to stay away from like like YouTubers that promise you incredible gains and just blindly invest in them, thinking that, you know, all ETH or Bitcoin are already too expensive. I will chase the next ETH, but like, in my opinion, there will be no next ETH, right? So for me, these networks are still undervalued. And so that's one thing. Then I think it's important, and I will send you a list for all those who are interested. I will send you a list of like good news outlets or good educators in the space that are, you know, have integrity and that don't pump their own bags, because that's what 99% of the YouTubers do. They make some deals with some shitty project, and then they make a video because they have 1 million followers just to pump their token, and then they dump it on them. So finding people with integrity is hard. And so yeah, I'll send you some of those. I think Twitter is an amazing source. I can also send you a list of accounts to follow. Twitter is basically like a real-time news feed of what's happening in the space. It's where all the people, like all the OGs, all the people that have been in the space for a long time, share just their daily thoughts. And by just being on there, you get access to you can pick their brain basically. And so that's important. Then, yeah, I think if you just invest in ETH, you have already done a lot of things right, because in the end, you're basically holding the token that powers this whole economy, right? So it's like whatever value gets created on top of this network, you're exposed to it. It captures all the economic activity. So you have already done a lot of things right. If you want to go a step further, definitely exactly get Metamask. I think, you know, buy a token, buy maybe an index, deposit. So what I also suggest is, like, instead of maybe buying even more crypto, and maybe you're already exposed, maybe take the less risky approach and just use some like euros that you have in your bank account, convert them into, you know, USDC on a centralized exchange, withdraw them to your MetaMask, deposit them in something like Aave, and earn interest on it. And just, you know, this way, you're not exposed to crypto more than you were before, and you're earning interest rate, you're playing around with it, and I think these are like good steps. Afterwards, definitely, you know, where you can make a lot of money, if you're interested in that, is by being in on good projects early, and that's where you have to be active in the space. But like active, and they are quite active. Like I have some friends who were able to you know, increase their portfolio size in a meaningful way without working in the space full time, but it requires some time investment. And yeah, I will invite everyone in the group, in the call, also in my Telegram group. I think it can also be helpful, where a lot of people just share their daily finds and stuff. So that will be helpful. But I think already holding ETH and a DeFi index, so being exposed to DeFi, it's already a really good step, and lending out some stable coins. And then you have like experienced it, and you can do a bit more risky stuff. Any other questions? Oh, I see we're over time. Yeah, if there are no, Jamison.
You answered it. I was going to ask about yield farming.
Okay, perfect. Yeah, if you have any other questions, I'm happy to take them. Otherwise, I would bounce. Let me know.
just Lito, you recorded the whole session. Are you recording it to share it somewhere else, or?
Yeah, I actually recorded it because some people couldn't attend and asked me if I could record it because they were in other time zones. I was also thinking, since I've been asked a lot about these intros, and I have done them like almost on a weekly basis in the last couple of weeks. I was also thinking about eventually putting it on YouTube, but I would only do that if you're all okay with that.
Yeah, absolutely.
Yeah, that's fine. I mean, that's fine.
Yeah, no problem.
Okay. Cool. All right. Well, then I have all your emails. I will follow up with a couple of links, and yeah, it was good having you here, and welcome to DeFi.
Thanks so much.
Thank you.
Thank you, Emmanuel.
Thank you so much.
Thanks a lot.
Bye bye.
Thanks, Lido.
Bye.